Welcome to Sales Accelerators, Winning Strategies for Financial Professionals, an educational webinar series that explores the latest tools and concepts to help boost your sales performance and drive business growth. Join us as we analyze trending topics in life insurance, investigate the latest headlines, and discuss solutions to accommodate your clients' unique needs. Please welcome your host, Kurt Fasen, Executive Vice President of Sales and Marketing.
Hello, welcome to another edition of Sales Accelerators. My name's Kurt Fasen, Executive Vice President here at TBS, and today we're going to be visiting with an old friend of mine, Adam Wall. Adam has been in the industry for many decades, which might date me because I've been knowing you, Adam, for a long time. Then we've both been around for many decades. He's currently a Regional Vice President with Protective Life, and he has tremendous experience and is going to have some fun insights to share with us today. Adam, welcome to the program.
Thanks, Kurt. I really appreciate it and looking forward to this.
Absolutely. All right. Well, today we're going to be talking about the importance of policy reviews. And really, we're going to dig into how the process can help you deepen your relationship with your clients, but ultimately benefits more sales. So before we go any further, take out a pencil. And if you took time to print out your webinar action plan, fantastic. If you didn't, just take out a sheet of paper. And if you're driving, well, then do your best to try to remember. But what I want you to do is, as Adam and I are walking through this conversation today, come up with some folks that you believe you would want to reach out to, somebody that you think would benefit from these ideas. I think it'll be easier to put all of this into action if you put some pen to paper and talk about to yourself, oh, you know what, I should really talk to. All right, you get the idea. Let's get started. Okay, you and I are familiar with this concept, but others, Adam, on this call just may need a little bit of a background just to understand a little bit more. So let's talk about policy review, or a life insurance checkup, I think, as you like to call it.
Yeah, of course. Thanks, Kurt. So, as a financial professional, we're working to ensure the security and success of the clients. And so by doing these regular policy reviews, or checkups, as we like to call them, we want to ensure that the clients maintain the protection that they need, as well as opening the door to deeper client relationships. And so we're going to talk about why that needs to happen, or it can happen, and how they're important for not only for your clients, but also for your own business. And we're going to walk through a couple different ideas and maybe success stories that I found through the years. And then at the end, we're going to kind of debunk the idea that these reviews are complicated or time consuming by walking through a roadmap for simplifying that process. And by the end, I hope that you'll be able to understand that this life checkup process can benefit you and your clients. And the tools that Protective and DBS has for you, and the resources, it will make it easier for you to incorporate it into your regular routine. And ultimately, the idea is to nourish these relationships that you have with your clients.
I think you said it very, very well, Adam. It's really what value are you bringing to your clients? Are you moving this from a conversation of just a transaction, or are you really providing them on an annual basis a way for them to make sure that the plans you put in place are the right plans? So, all advisors want to build good relationships and want to foster these relationships as time goes on. But maybe, Adam, we could talk a little bit more about the importance of building strong relationships.
Yeah, when I think about strong relationships and what that means to a financial advisor's business, I really look at it in three different areas. The first one would be to promote the retention. And as you look at it, you're selling to your current consumer base. If an existing consumer, you have a 60 to 70% chance of selling them another product. Whereas if you go out and try to find a new client, you only have about a 5 to 20% success rate on selling to them. And so while we always want to bring in new clients and look for new clients, your existing base actually has the highest likelihood of selling a new product to. And so that client retention is one of them. The second one would be encourage growth. And every financial advisor I've ever worked with that's successful, they tell me the number one reason for that is client referrals, right? And so referrals is a big area of what we do. And by having these regular life checkups, you're able to strengthen that relationship and ask, every one of those, you're able to ask for referrals. And we know that if the client is going to refer somebody, 72% of them, if it's a good relationship, so they'll tell 6 other people. And so 70% of your customers, if they like you, they're going to tell at least 6 different people about how good a job you are doing for them. And so that referral growth is a key area to this relationship. And then finally, it's what I look at as kind of playing a little defense as well, protecting your personal brand. And while we think we have a great relationship with everybody, right? I think a lot of times we think, yeah, everyone's probably pretty happy. But unless you're doing those annual reviews and meeting with them, someone may not be as happy as you think they are. And if you have an individual that's talking negatively about you, in fact, they tell more people on a negative experience than they do a positive. They can tell up to 15 individuals if they have a negative experience with you. And so, it's also playing a little defense. Protect your brand, do those annual reviews, make sure everyone's on the same page and you're giving them the service and the relationship that we know you want to give them.
Well, absolutely. And it might seem obvious, but Adam, as you think about it, are there any other underlying benefits to doing this type of analysis or review on a regular basis with clients?
Yeah, I mean, as we've talked with financial advisors, and there's a lot of studies that go on talking with the consumers and how they want to buy life insurance. And one thing we do know is that these clients, they still want guidance on purchasing life insurance. Can you go out and buy it by themselves? Sure. There's a lot of different places online where you can just go out and purchase on the way. But more and more consumers are telling us that they want some guidance. They want to use a professional for that. And so you being that financial professional is that opportunity for them to utilize you and your expertise. And in fact, one of the studies that we have on a slide is talking about 1 in 5 people feel like they're underinsured, that they may be underinsured. And I thought about that for a minute, and it says so that's 20% of people think they might be underinsured. Well, what are the odds that they probably are, right? If you think you are, most likely you are, and it's probably a lot higher than that. And so there's a big opportunity for people out there that are probably underinsured. One of my favorites is you see a commercial online, you have a family, they have 4 kids, they have a big house, they have 2 dogs, and they say, hey, we can buy you $100,000 of term insurance. I kind of laugh, like, what's that $100,000 going to do for you? That house is worth $1 million. And so, but those are things that they get told one thing by marketing and radio ads, but they really want to come to a financial professional to get to ultimately make the purchase and find out what they really need. And then one of my favorite studies that LIMRA has done, and LIMRA is one of the big advocacy organizations in the life insurance space, and they do a lot of consumer studies. And one of them they did is that 7 in 10 individuals say financial professionals are their main point of expertise for information. And so that looks at all the different professionals they work with, and 7 out of 10 of them choose financial advisors, the most trustworthy one that they want to go to. And so what that tells me is that the key to success really is turning to having those relationships, and those are really turn those transactions into ongoing relationships. And that's really where we can step in and enter with our life checkup materials.
I think that's wonderful. Wow. And can you do that statistic one more time? 70%. The LIMRA study said 70%. Is that what you said?
Yes. 7 in 10 consumers choose financial professionals, the single most valuable information source.
That is, that's all of you. That's all of you. And, kudos to you for joining us today to learn about this. But just think about that. 70% is a big number. All right. Well, we've teased out the life checkup. Let's talk about the life insurance checkup. Maybe you could just delve into a little more detail and really what this looks like when it's put into action.
Yeah, I'd be happy to. So there's different areas that we want to look at when we look at these policies. Everyone wants to initially go, hey, do I have the right amount of death benefit? And that's a need, and that's something we definitely want to address. But there's also some of these administrative things that I think is very important as you as a professional that you need to bring up to your clients. Some of those is beneficiaries, right? We often see divorce people that still have their ex-spouse as a beneficiary. Is that what you want? Maybe it is. Maybe it's a court order that you have to have the ex-spouse as a beneficiary, but maybe it's not. And so those are items that we want to look at. Ownership structures. There's a lot of individuals that get life insurance for business purposes. Maybe it's a buy-sell with a company that they own with another owner. That company has been sold, and look at it's like, hey, that owner still owns your life insurance policy that your old coworker that you no longer have a relationship with. Is that the way you want it? And odds are probably not, right? And so there's a lot of these things that maybe the clients haven't looked at for a long time, and ways for that you can bring value onto it, just administrative. And then you can look at, once you've kind of looked at that, is then you look at the policy itself and say, hey, is this still performing the way you wanted it to? Is it accomplishing the goals that you want to do it? Is it underperforming, whether due to the policy makeup or maybe the funding pattern? And so there's a lot of different ways to make sure the policy is as efficient as we really want it to be, and for that to meet their goals. And I think going into these conversations, you want to be clear with the clients, because many clients are going to think when you're doing a life checkup, oh, they're just trying to sell me more life insurance. And that's not always the case. In fact, there's a large percentage of the cases that we look at that are they work great for the client. We look at the goals, what they wanted to. We look at the current in force, and if things are matching up and things are performing well, then I think that's a great solution. And while that individual case might not lead to a new one, that's that deepening relationship that we talked about earlier. And just think of how good a referral source that individual can be for you. If you come back and say, hey, I did this work, looks like you're in a great spot. You can go forward. You have a really good opportunity. Whoever sold the policy did a good job. And so I think that's areas where you can build that trust with your clients as well. And so I would want to point out, though, at the end of those conversations, if there are gaps, as a professional, it really is incumbent on you to document those gaps to your clients. And now, ultimately, it is their decision, right, on if they want to go forward with the suggestions that you make. But part of being their advisor is to point out where there's some gap and make sure that you put in a well thought out and a clear way to show where you believe is a good opportunity for them to maybe change their coverage. And at the end of this, with the life checkups, this will allow you to discuss those situations and offer some needs that maybe they haven't even thought of yet, and really to put your clients ultimately in the best spot going forward.
I love that process. And back when I was an advisor, we did a lot of policy reviews. And you're right, sometimes it doesn't lead to an immediate sale, and that's okay, because you've really shown to the client that you're out looking for their best interest, not for your pocketbook. And I agree. I mean, those clients become the very best referral sources going forward. Hard stop. They're fantastic, because they know that you're really in it for the long term to help them and to help their friends. So maybe we should talk a little bit further about maybe a real life example. You said you might have a couple we could walk through today, and better to visualize really how this works with a client. So you want to walk through one of your case studies?
Yeah, I'd be happy to. And the first one I'm going to start with is our term insurance. And I would say term insurance is easily the most commonly sold product in the marketplace, right? And so a lot of our consumers do have term insurance, and it's a great opportunity to kind of open up the doors and say, hey, let's look at what you have. And one thing people might not be aware of is how much term insurance rates have decreased in the past 5 years. They've come down significantly, so much so that, as I look at one example I ran into the other day, an individual, even though he's older, was able to reduce the cost of his insurance. And so I'll give you the example. We have Jonathan, he was 30 years old in 2021, bought $500,000 of 20-year term, and that costs $30 per month. Now, fast forward to 2026, that's saved $500,000 for him. Now, at the age of 35, costs $25 per month. So think about that. We're able to save $5, and I understand it's not a huge case, but the client, we're able to save him $5 per month, even though he's 5 years older, and still get 20 years of coverage. So we're extending another 5 years and saving him money. And so the rates have gone down so much that even if the client got older, we're able to still put him in a better situation. Now, in this situation where we leveraged it is, hey, we had some savings, but can provide additional value to the client. And ultimately, that's what we're really looking to do, right? And in this individual, he did have some concern about long-term care costs. His parents were currently going through some medical issues later in life, and so it was a concern of his. And with Protective, we offer a conversion choice rider. And what this conversion choice rider does, it gives you two things. One, it allows you to convert into any of our products available for sale for the full conversion period. So you're able to lock in very, very good permanent contracts for the life of the term or for the life of the conversion. And then two, and more importantly for this individual, it allows him to add a chronic illness rider at the time of conversion. And so without underwriting. And that's a big piece of this is that we underwrite for it at the upfront time at the time of the insurance, you underwrite for the initial insurance. But let's say 15 years down the road, he converts and wants a chronic illness rider. There is no, it's guaranteed right to convert, guaranteed right to get that rider. And so it's really beneficial for this client. So adding that conversion choice rider does add a little more every month. So that adds $9 per month to add that conversion choice rider. So that brings his premium up to $34. But ultimately, for the clients, like, well, I was already paying 30. Now I pay 34, and I get the ability to have a chronic illness rider. That's a pretty big value add for that client. And ultimately, I think is something that is we see more and more often because 5 years ago, you didn't really have these riders. Protective didn't have a conversion choice rider. There weren't many in the marketplace. And so, part of doing these policy reviews is the fact that carriers keep coming up with new riders and new opportunities to make these products better. And by doing regular reviews, you're able to take advantage of some of those.
I love that. And that, Jonathan's story is probably very, very common, right? They have parents that are going through some long-term care things and, oh boy, what am I going to do here? And just you as their advisor, just helping them to understand what their options are and telling them that, hey, there is a chronic illness rider we can put on this, and it isn't going to break the bank, right? And that's great news. Do you have any other examples? I think you said you had another one you wanted to walk through today.
Yeah, I do. We have one other one where, and this is something that over the years I've seen quite often, where an individual is maybe getting closer to retirement and starting to look at all the coverages she had in force and maybe she bought a few different policies over the years for different needs. And so one example that we have is we have a lady in the slide. Her name's Susan. She's 55 years old. And she has two different policies from two different life insurance carriers, and $840,000 a death benefit between the two of them. And she's paying just over $12,000 per year in premium. Now there is some cash inside that contract as well, about $63,000 of combined cash value. And so the financial advisor was talking with Susan, her client, and they're going through the goals and the needs that she saw going forward, and her life had changed. And this is one of the things that we bring up in our life checkup is different triggers that can kind of look for you to change their coverage or look at reassessing where they currently are at. And for her kids are older and gone, and so the income replacement piece of insurance wasn't as important as it was previously. However, as her kids are growing and gone, and they're living their own lives, it also made her think that, man, she doesn't really want to put the burden of her kids on to help take care of her later in life. And so she was thinking of, hey, I would like to keep this coverage, but could I add some type of long-term care type rider, a chronic illness rider? And that's really where we started to look at it. And once we started to go down that path of, is there a better option rather than have two separate policies, two separate carriers? Can we simplify it into one policy and provide the value that you're looking for? And so as we started to look through it, we said, well, I think we can do that. And not only can we simplify into one, would you be okay if we lower the premium? And I don't know about you, Kurt, but usually when you can lower the premium, that also is a positive impact for the client. And so for the example that we ended up doing is that we were able to combine 1035. So at Protective, we can take multiple 1035s and combine it into one 1035 to have a new policy. We were able to match the death benefit. We lowered the premium from $12,100 to $9,800. So we're able to save her some significant money and add the chronic illness rider. And so now we're able to have this chronic illness rider and chronic illness rider by Protective. What that means is that we're able to accelerate the death benefit on a monthly basis to provide for her chronic care needs. And so the trigger for that would be 2 out of 6 activities of daily living or cognitive impairment. And once she qualifies for that, she can start, there's a 90-day wait period, but after that, you can start taking this benefit. And, one neat thing about Protective is that once she's on claim, the policy cannot lapse. She doesn't have to worry about continue making those premiums or monitoring performance of the policy. Once she's on claim, that policy will be there, her benefit will be there, and whatever it remains would be a death benefit as part of her legacy. And so it was a great way to say, all right, things have changed. These policies, maybe they did okay, but let's simplify it, one policy, lower the premium, and put you into a better solution at the end of the day.
What a great outcome for Susan. That's a great story. I mean, you have, and I don't know about you, but I've come across a lot of clients. I'm sure those of you with us today have come across a lot of clients that have multiple policies. They bought a little one when they first got married, maybe a little one over here and all of that, and now they've got multiple policies laying all over the place. And putting it together, number one, makes sense because you're lowering your administrative costs. You only got one policy. And then the kicker is that you're able to give her more benefit by adding the chronic illness rider and save her money in the process. What a great outcome. So kudos to you and the team for getting that done. My hunch is, one of the challenges in all, it doesn't matter if we're talking about life insurance or anything else in life, I think the thing that causes people to not take action, Adam, is the fear of this is too complicated. It's a daunting task. I've never done it before. It'd be easier just not to do it. That's probably what I'm going to do, not do this because it's too much work. So maybe you could talk a little bit. What would you say to advisors that say, I think it's just too much work, too time consuming. I'm very busy. I'm trying to put assets under management. I'm trying to do other things. How can advisors start now to really getting this into a routine and doing it regularly?
Yeah, I think that's a good point. And you're right. It can seem like a steep hill, but that's, what we're here to try to help you with. And I think it's to try to separate them out into specific areas, kind of like the one that we just saw with Susan, and try to identify your clients that fit certain scenarios, and let's start there and work through that. And so, do you have clients that have a life event? And these are the obvious ones, but I think it's important, right? Is there a new birth of a child? Well, that could change the coverage. Did you buy a house? Did you have a career change? Is there a divorce that happened? So those big life events are big ones. And one that you mentioned already, Kurt, is, do they have a parent that's in a long-term care facility or needs some care? That's one that we see all the time where it's like, hey, I know how much work this is for me. I do not want to put that burden on my kids. And so those are the individuals that you can really start with. Some other ones that we have that we see often are, people that are closing in on retirement. Do I need as much term insurance as I had before, or much insurance? And one thing we see often there is that that's a great opportunity that we actually reduce coverage on face amount, but maybe we change that from a term to a permanent policy. Instead of $2 million of term insurance, maybe we say, hey, you don't need that much, but 500,000 of permanent coverage for legacy or something like that. And so that's a great conversation to have with them. And those are opportunities where, hey, there might be an opportunity to convert some of that term into permanent and maybe a partial conversion. And so, many good carriers have good conversion opportunities. Then the client doesn't even have to go through underwriting. And so as you start picking out these clients, it's a great opportunity to, all right, I'm going to look for individuals that look like this and kind of cull through your book and use some of the fact finders and some of the things that we have. And then once you identify those clients, we've talked a little bit before, but essentially you really want to set those expectations with the clients as they're coming in and say, look, let's just take a look to see where your coverage is today, and let's see where your goals are and things that have changed. And that way you'll be able to walk through, go through the needs analysis and estimate the amount of insurance that they need to match those goals. And after that, then you can look at their current policies and see if there's additional things that need to be done. But we think by doing that pre-work and some of the help that we can do allows you to offer the right insurance for your clients and set them up for ultimate success. And at Protective, we do have some tools. You can find them at myprotective.com/life checkup. We'll push you to a site that allows you to download some of these forms. But I look at life checkups as something that people get away from at times. And, it's that old saying, it works so well, I stopped doing it. And so this is a way to re-engage your clients, and as Kurt and I have talked about today, it's deepening that relationship, to strengthen those long-term relationships, at the same time, giving them an opportunity to find maybe some good opportunities for your own business, but put your clients in the best possible position.
I totally agree. What a great conversation. What a great time of year really to start inserting this in. If you're not already doing it, I'd encourage you to step back and see how you can start bringing policy review, the life insurance checkup, into what you're doing on an annual basis with all of your clients. I also want to remind folks, DBS has a very comprehensive policy review platform. In fact, just in the last 30 days, we have invested significantly into a brand new policy review platform tool that our case design analysts are staying by and are happy to help you with. And it brings in the resources and all the materials that you've heard of from Protective and from others to really help you bring the right solutions and the right ideas to your clients. In fact, we have a whole spot, you can see right here, we have a whole spot on our website that is dedicated tools for policy review, just everything located in one spot. So make sure that you reach out to your regional sales director, your case design analyst. They're really here to be your advanced resource for situations like this. So make sure you talk to them. We are here to help every step of the way. Adam, it's been fantastic to have you join the program today. Thanks for joining. Any final words for our audience today?
Thank you. I really enjoyed it, and thank you, DBS, for being a great partner of Protective Life. And good luck on your life checkup meetings coming up in the next few months.
Love it. Hey, everybody, thanks so much for taking time again to join us for another edition of Sales Accelerators. We look forward to seeing you again real soon. Until then, be well and take care, everybody.